Hi, it's Kim Darwaza here with Remax Executives, your Northern Virginia Realtor, and today I'm with Loan Officer Rob Hoy from Caliber Loans. So I recently had a transaction where we were with a regular lender and a situation arose a couple days prior to closing, and my loan officer was unable to process the loan. It was going to get denied. But there are other lenders out there that do what we call portfolio lending, and so Rob was able to save the loan for us. So I'll give you a little background on the scenario. I had a client who got a divorce, and part of her divorce agreement was that she was not going to have any she wasn't going to be held accountable for anything that had to do with their home that they owned as a married couple. And so they got divorced, and she was running for a little bit and then decided to buy. And then a couple days before closing, they did a title search, and it came up that her name was on a house that had gotten foreclosed on, that she assumed she was not on title anymore. So that was pretty much going to be a deal killer. But Rob had a different type of loan product that got us to the closing table, and now we have a very happy homeowner. So Rob, do you want to give us some specifics? I think one thing we'll say first is this is not a loan for people who have bad credit and don't have any assets, right?
Yeah, that's right. So Caliber Home Loans, we're pretty large company. We do mostly agency loans, so Fannie Freddie loans, but the company also has this portfolio loan suite with the most popular product called Fresh Start. And so when you have a situation where a client doesn't meet the Fannie Freddie guidelines, this can be an option. Like Kim said, this particular client had a foreclosure that hadn't been seasoned for 3 years, so she was unable to qualify for an FHA loan, which is what she was trying to get approved for. But this Fresh Start program doesn't have a seasoning requirement. It's a little bit different than FHA because rather than being able to do 3.5% down, she had to do 15% down. And also, unlike FHA, where you don't have to have any reserves, meaning after closing, you don't have to have any additional savings, our Fresh Start program requires 6 months of reserves. So this client had good credit, she had reserves, she had enough money to put 15% down, so she met all of our Fresh Start programs or program guidelines. And so other than this foreclosure, she would have qualified for a Fannie Freddie loan. So we took the loan application. It's all manual underwriting, so everything has to be reviewed. But 2 weeks, we took the application, and then we were able to close our loan in 2 weeks.
Yeah, so that's like we went through the normal loan process, which was like about 30 days. So it added another 2 weeks onto it. We did have to order another appraisal, which was, those are like $500 roughly. So we did have to order a second appraisal once it got transferred to a different company. Now, if you knew this in advance, would the process still take longer than 30 days? Like if you kind of knew going into it that we were going to have this?
So like in this particular situation, for us, it was like starting over. So
right.
We closed it in 2 weeks. So if a borrower knew that, or like if I had pre-qualified a borrower and I saw that they weren't qualified for an agency program, we would qualify them in this program, and it would be the same as any other loan at that point. In this instance, obviously we took it over after it had already been through and gotten denied, so we took it over really the day before it was supposed to close, so we had to add an extra 2 weeks. But in general, it's the same time frame as any loan. Even though it was the other thing I was going to mention to sort of compare to FHA is that 15% down, rates are a little higher, but it also doesn't have monthly MI. So that sort of offsets the higher rate. again, it's not for everybody, but in the right situation, it can save a transaction, and like in this case, it did.
And you can, the clock is ticking on the seasoning, so you can refinance out of that interest rate like the day after you hit 3 years or something like that, right?
Yeah, like so this borrower will meet the FHA guideline next year, and then next year we'll probably refinance her into an FHA loan. Yeah.
Okay. So again, just to summarize, this is definitely a loan where you might have something on that happened that's negative, but you're still in good standing as far as like you have a job, you have cash reserves, you have a down payment. So it's not for a person who has bad credit and no. And I think to our particular client, her credit score was probably okay because it had been a while.
Yeah, great job, good credit.
Her debt to income ratio was good.
Yeah.
Like there's a lot of different factors. So if this isn't like back when we had the subprime mortgages where like if you could fog a mirror or breathe, I would say that you could get a loan. I mean, you definitely have to be in good standing. You just kind of had an unfortunate situation that occurred that may be tied to a divorce or some other event, a lifetime event. So.
Right, and there are a lot of people that want to buy houses and are unable because of something like this, and so they're forced to artificially wait for a deadline. This allows them to get into that house maybe before interest rates rise or the prices of the houses rise, or even they just find the house they want and they don't want to wait. So this allows them to move sooner.
Okay. So is there anything else you can think of?
No.
Do you want to give them your contact information in case they're interested?
My name is Rob Hoy, and the company I work for is Caliber Home Loans, and best way to reach me is on my cell phone, 703-623-7857.
Okay, well, thanks, Rob, for doing this with me, and thanks, everyone, for watching, and have a great day.